Have you ever heard of high probability trading method? Well, that occurs when your win rate is above 70% and your lose rate is below 30%. Not bad, right? Well, in today's lab session, I'm going to show you how to achieve that type of win rate. You're going to win over 70% of the time and lose less than 30% of the time. Let's get into the lab and get into it now. All right, we're back in the lab, and today we're going to talk about breakouts and pullbacks, and I'm going to explain to you how you can achieve high probability win rate. Everybody wants high probability win rate, and that's what we're going to talk about in today's session. First of all, let me talk to you about a breakout. Breakouts occur when price trade above a previous swing high. It could be a 90-day high, a 6-month high, or a 52-week high. Typically speaking, the longer the price congests, the better the breakout and the higher probability that price will continue. Now, with that said, breakouts typically have a low probability of profit. Why is that the case? Well, usually when you see a breakout, you see an explosion of volatility and price, like you see here. You see a very quiet trading range here, and then you see an explosion. When you see that, volatility and trading range gets really out of whack. And many professional traders monitor breakouts. So when you see a breakout, you can expect a lot of traders to pile in, and that creates extra volatility, and that can cause your trade to go against you at times. So a breakout occurs when momentum takes price levels above previous highs or previous lows. And the longer the trading range prior to the breakout, the higher the odds that the breakout will be real and not be a false breakout. And that's what you're trying to avoid, false breakouts. You want to have high probability of success. Now, let's talk about price pullbacks. You're still trading in the direction of the trend, but you're waiting for price to pull back before you go long. Usually, when price pulls back, you see lower volatility level and you see less trading range. Also, there's a lot less traders following pullbacks than breakouts. And the reason for that is simple. Breakouts are much easier and much more objective than pullbacks. It's very easy to see when price is pulling above a certain level. It's much harder to see when price pulls back to a specific level. So you have lower risk entry on a pullback than on a breakout. If you were to look at this setup accuracy matrix, you would find that the breakout has an accuracy of between 25 and 60%. That's accuracy on winning trades, while pullbacks have accuracy between 65 and 80%. Now, if you recall, when I mentioned breakouts, I explained that the shorter your time period before the breakout, the lower your percentage of winning trades. So if you wait 30 days before trading breakouts or 40 days, your accuracy is going to be about 25 to 30%. But if you extend your time period to about 6 months to a year, your accuracy will get up to about 60%. If you look at pullbacks, the accuracy is higher. On average, pullbacks give you accuracy per trade of about 65 to 80%, which is significantly better than most breakouts. Most breakouts average about 45 to 50%, while most pullbacks average 70 to 75%. These are real stats from our flagship pullback program at WealthPress. And you can see here, out of about 143 trades, we've had a 72.73% win rate. That means out of 143 trades, we've won more than 72.73% of the time. And that's very accurate. Now, I created a high probability pullback class. It'll teach you how to trade and spot high probability pullbacks from A to Z. Don't delay, register now. Don't wait. Talk soon.